Let's look back about a year and a half ago. We were trucking along in the stock market. Everything was going great. S&P, other indexes near all-time highs or at all-time highs. Then a month passes and we start hearing about this pandemic. There's something out of China. We think, oh, it's no big deal. A month later, from there, the stock market crashes. We're talking about the worst crash that we have ever seen in the S&P 500, in the other indexes. People think that there are going to be tens or hundreds of millions of people that die, maybe even more. The indexes go down dramatically. Everyone's worried about bankruptcy. All these S&P 500 companies, all the companies that you know and love, go down significantly. And for everyone that started to think, okay, these are starting to become really discounted prices, assuming they don't go bankrupt. Some of them have great balance sheets, by the way. Assuming they don't go bankrupt, we're buying in at fantastic prices that we haven't seen in 5-10 years. Some of them are discounted at a great value. So a lot of new investors came into the market. A lot of new investors started to buy into some growth stocks because once we started to see a return to normal, and once you start to wrap your head around, okay, everyone's going to start working from home, you could see that there were some technology companies that were going to do quite well. A whole bunch of new investors came into the market, realized that there was a collective strength. If enough people feel a certain way about a stock, that you can push it up, right? We started to look at what ARK Invest was doing. We started to look at SPACs because that was something that seemed like an arbitrage play, limited downside, but huge potential upside. Everyone was buying into new EV stocks. We started to look at penny stocks around the beginning of this year because a lot of them went up significantly. Then we start to look at cryptos, right? A lot of cryptos did fantastic. Since last year, they're up 10x to 100x, a lot of the ones that you might know of. However, right now, we're in a place where there's a lot of fear, a lot of capitulation. A lot of people bought a lot of those growth stocks, and now they're not doing quite as well as people thought they would. And a lot of people are quitting stocks. It's something that I'm seeing all the time. I see it on my Patreon even, where someone says, hey, I really appreciate what you did, but I'm taking a step back. We have to talk about that here today. Now, if you don't know, my name's Sam from My Financial Friend, obviously. This is my channel. Please hit that like button and hit subscribe down below the video if you guys want to hear more about stocks and stock market content, because right now we're in an interesting place where a lot of people, for maybe the first couple months, right, when we saw a downturn, they said, hey, great buying opportunity. March, April, May, great buying opportunity. Well, now it's June and July. We're starting to see some of the same price that we saw earlier. Now, we're seeing people leave the space, and I think this is dangerous. This is why I want to talk about it. And JJ Buckner's done a great video on this before, several months ago. I think this is one of the worst things that you can do when the market's down or when it's trading sideways, is to get out of the game, right? It should be a long-term thing, investing in the stock market. Now, something on YouTube that is not great is they don't promote a lot of like index fund investing or dividend investing, less risky forms of investing. But for a lot of people, that might suit your time, and that might suit what you like to do a little bit more, maybe your risk tolerance. Now, for everyone else that wants outsized gains, you have to realize that the stock market's not always going to move up and down dramatically, or it might just fluctuate at the same price for a while, up and down 10, 20%. Something that Warren Buffett said, the stock market is a device for transferring money from the impatient to the patient. We've seen that with companies like Tesla before, where they traded sideways or negatively for multiple years on end, and then all of a sudden they have a 10x. So I realize a lot of people use Tesla, but that's just one great example. There are a lot of other companies that have done that too. And another great quote, markets can remain irrational longer than you can remain solvent. I like to think of that, if you're on leverage, that's not great. Or if you've plowed all your money into the market and now it's gone down 30% or 20% or 50, 80%, that's why it's always important to make sure that your risk tolerance is accurate for what you're actually doing, or it matches up, and that you have cash on the sidelines. I know some people say, hey, this person makes so much more than me, they have money coming in all the time. Well, we all get paychecks, right? Or a lot of us do at least. And if you don't, then maybe you want to stagger out your buys. That's why it's really important to make sure that you personalize this for yourself instead of watching any one person on YouTube. Let it inform your decision or let it bounce around in your head. But everyone's going to be different. But long term, if you want to gain wealth in the stock market, it's not a 1-year thing. Even if a stock goes up and doubles, right? Most of us aren't going to retire on that one stock doubling, right? I mean, if you put in 100 grand and you double it, that's awesome. That's a fantastic return. It would take 10 years usually in the S&P 500. But you're not going to retire on $200,000. So unless you're doing it with hundreds of thousands or millions of dollars, it's not going to create a situation where you just retire. You have to be thinking about this long term. And that's where this market is actually fantastic. When you get a market that's trading sideways or even trading negatively for 2, 3, 4, 5, 6, 7 months, the earnings are fantastic right now for a lot of companies. They're still increasing earnings. But when you get a market that's trading down like this, you have a lot of time to research companies. You have a lot of time to figure out your game plan, right? It's really hard when the market's going up and down 10 or 20% a day, and there's all this fear, right? Whether, banks are going to not be able to backstop and actually be able to support the economy, or the Fed is going to give stimulus, or it's not going to give stimulus, or people are going to have to foreclose on homes, or companies are going to go bankrupt. That's fearful. That's where there's a lot of risk. Right now, though, there's a lot of time to do your research, to figure out what companies you like, the companies that you think will do well, and to average in over not just a week or a month, but over multiple months, right? This is one of the best opportunities to average into a company because it's not spiking up 300% in a month or two where you can't actually build out a position and make sure you do all your own research. Typically, I like to do the majority of my research right at first, but I'm still learning stuff about the company, a couple weeks later, right? There's always new stuff that you learn about companies, especially if you're looking into them more and more. So that's something you have to pay attention to, that, hey, this is a great time to be investing if you are doing your research. Now, of course, it's a little bit more boring than it was before, right? We're not getting these massive fluctuations in price, which makes it a little bit more boring for some people. But again, it's transferring money from the impatient to the patient. Also, this is a great time to build up your income sources. And I know some people can't do that as well as others. Some people have different situations. But if you can make a little bit more money, that's going to drastically change your investing career, right? If you can invest, let's say you make $50,000 a year and you're able to save and invest 10% of that, so $5,000. If you can get a 10% raise, so if you're able to invest double as much, that is huge in the long term. So if you can build up some other side hustle or side income, that's going to be huge for you as an investor. So this is where maybe you start thinking about other ways that you can make money even outside the stock market, right? That could be really important. So I just wanted to bring this to your attention because I really see it every single day that people are leaving the stock market because they're a little bit bored or they lost 10%, 20% of their money. But long term, this is a long-term investment plan, right? You have to think longer term than a couple months, maybe even a couple years, right? So you might have to change your portfolio around a little bit to make sure that it fits your risk profile. Now, of course, I am averaging in. I'm going to continue to buy good quality stocks. If you guys want to follow that, you can subscribe to the channel down below. Thank you guys, and I will see you in the next video. Bye.